Welcome everyone to 912 Financial Group's review of the 912 Playbook Mid-October Edition Trader Trend Suggestions. Powell says inflation is still too high and that lower economic growth is likely needed to bring it down. Israel is on the verge of dragging both Iran and the U.S. into a Middle East conflict. Ukraine and Russia is still going. Consumer credit continues to shrink. More people are seeking employment than there are available jobs, and despite financial constraints, people are still spending beyond their means, especially on mortgages and car payments. And yet, the S&P and NASDAQ still remain in a macro uptrend range. Now, we could break the trend in a heartbeat. A string of earnings disappointments, poor guidance, or simply an escalation of actions overseas could finally bring us back below 4,200 on the S&P. We still don't believe a move to the downside will be of great magnitude or duration. We do believe that it will cause more losses for those in the zero-hedge fanboy crowd than it will for those taking the macro outlook of BTFD. Shorting market after a peak in inflation is never a good idea, as the S&P generally has double-digit returns once rates inflation stabilizes, and we are way closer to that happening than we are to seeing another round of double-digit inflation. With Treasury rates exceeding pre-global financial crisis levels, this looks to be a generational opportunity in the fixed income space. Plus, if fixed income investments gain traction, the broader market is likely to follow suit. That said, we will continue to maintain our strategy of buying during market downturns and setting our stops until they get hit. If these stops are triggered, we'll adopt a more conservative approach, as we have already done with some of the names we follow, and honestly, that's a lot easier and less stressful. Remember, if you prefer a cautious approach from the start, consider avoiding the conditional bullish vertical spread suggestions. Instead, focus on out-of-the-money, naked put options. While this strategy might not yield substantial gains, it offers a more secure position, with the worst-case scenario being ownership at a greatly discounted price to where we were a couple of months ago. In the commodities sector, metals pose the greatest risk. A lessening of tensions overseas could end the flight to safety. Bonds remain a solid investment choice. Consider selling at-the-money or out-of-the-money long-term puts. Oil, however, stands out as an exception, showing potential resilience regardless of headline. Even a lessening of tensions shouldn't diminish demand given current strategic petroleum reserve levels. To summarize, take advantage of the increased market volatility by selling inflated out-of-the-money units and sit back knowing as an investor you need the market to drop to buy it lower. And where did we end up? At the highs for the cycle. We're using the conditional entries to buy the pullback, and letting the short puts breathe was the way to play it. We had some stops hit, but that's the game. Okay, let's move on to the trade suggestions. Let's start with the featured trade and maintenance suggestion. Devon Energy Corp, we had it as a bullish counter trend. DVN opened at 47.67, and the suggestion was to sell the November 45 put with a stop at 42.59, which you could have sold at 102. It wasn't stopped. It could have been bought back at 5 cents for a profit of $97. Moving on to bond ETF trade and maintenance suggestions. iShares, iBox, High Yield Corporate Bond ETF. We had it as a neutral. HYG opened at 71.77, and the suggestion was to sell the November 74.5 call with a stop at 74.01. It took until November 2nd to get filled at our minimum premium of 15 cents. Unfortunately, it was stopped for 38 cents on November 3rd for a $23 loss. iShares 20-year Treasury Bond ETF, we had it as a neutral. TLT opened at 82.81, and the suggestion was to sell the November 95 call with a stop at 93.95. Unfortunately, it never hit our minimum premium of 15 cents, and there was no entry. iShares iBox Investment Grade Corporate Bond ETF, we had it as a neutral. LQD opened at 98.38, and the suggestion was to sell the November 105 call with a stop at 104.17. Unfortunately, it never hit our minimum premium of 15 cents, and there was no entry. Now, the international ETF trade and maintenance suggestions. iShares MSCI EAFE ETF, we have it as a neutral. EFA opened at 66.32, and the suggestion was to sell the November 71 call with a stop at 70.29. It took until November 3rd to get filled at our minimum premium of 15 cents. Unfortunately, it was stopped for 28 cents on November 14th on the gap open at 70.46 for a $13 loss. iShares MSCI Mexico Capped ETF, we had it as a neutral. EWW opened at 52.88, and the suggestion was to sell the November 60 call with a stop at 59.12. It took until November 2nd to get filled at our minimum premium of 15 cents. Unfortunately, it was stopped for 15 cents on November 3rd for no gain or loss. iShares MSCI Brazil Capped ETF, we had it as a neutral. EWZ opened at 29.69, and the suggestion was to sell the November 31.5 call, which you could have sold at 32 cents with a stop at 30.78. Unfortunately, it was stopped for 59 cents on October 27th for a $27 loss. On to the commodity-based ETF trade and maintenance suggestions. Spider Gold Shares ETF, we had it as a bullish hold. GLD opened at 183.51. And the suggestion was to sell the November 180 put, which you could have sold at $1.35 with a stop at 178.28. It wasn't stopped. It could have been bought back at 5 cents for a profit of $130. If you went the bull call spread with conditional entry route, you bought the November 180, 185 bull call spread on November 10th for $1.25. And closed it at 367 on expiration Friday when GLD closed at 183.67 for a $242 profit. Remember, we are not looking to hold stock positions beyond the current cycle. Close all trader trend positions by the close on expiration day. iShares Silver Trust ETF, we had it as a bullish hold. SLV opened at 21.20, and the suggestion was to sell the November 21.5 put with a stop at 21.27. Unfortunately, there was no entry as SLV opened below the stop. If you went the bull call spread with conditional entry route, there was also no entry there too, as SLV opened below the stop. Spider S&P Metals and Mining ETF, we had it as a neutral. XME opened at 48.50, and the suggestion was to sell the November 52 call, which you could have sold at 45 cents with a stop at 50.99. Unfortunately, it was stopped for 65 cents on November 3rd for a $20 loss. Spider S&P Oil and Gas Exploration and Production ETF, we had it as a bullish hold. XOP opened at 148.80, and the suggestion was to sell the November 147 put, which you could have sold at $4 with a stop at 142.22. Unfortunately, it was stopped for $6.55 on October 30th for a $255 loss. If you went the bull call spread with conditional entry route, you bought the November 147.154 bull call spread on October 24th at $2.90 and were stopped at $1.50 on October 30th with a loss of $140. Spider Energy Select Sector ETF, we had it as a bullish hold. XLE opened at 89.74, and the suggestion was to sell the November 89.5 put, which you could have sold at 2.30 with a stop at 87.33. Unfortunately, it was stopped for 3.30 on October 25th for a $100 loss. If you went the bull call spread with conditional entry route, you bought the November 89.5 93 bull call spread on October 23rd at $1.50 and were stopped at 90 cents on October 25th with a loss of $60. PowerShares DB Agriculture ETF, we had it as a bullish hold. DBA opened at 21.94, and the suggestion was to sell the November 21 put with a stop at 21.55. Unfortunately, it never hit our minimum premium of 15 cents, and there was no entry. If you went the bull call spread with conditional entry route, you needed DBA to trade down to 21.71, which it didn't do. So moving on to healthcare ETF trade and maintenance suggestions. Spider S&P Biotech ETF, we had it as a neutral. XBI opened at 66.22, and the suggestion was to sell the November 78 call with a stop at 77.12. Unfortunately, it never hit our minimum premium of 15 cents, and there was no entry. Next, real estate ETF trade and maintenance suggestions. Vanguard REIT ETF, we had it as a neutral. VNQ opened at 71.73, and the suggestion was to sell the November 82 call with a stop at 81.64. It took until November 2nd to get filled at our minimum premium of 15 cents. It wasn't stopped. It could have been bought back at 5 cents for a profit of $10. Spider, S&P, Home Builders, ETF, we had it as a neutral. XHB opened at 70.57, and the suggestion was to sell the November 81 call with a stop at 79.66. It took until October 31st to get filled at our minimum premium of 15 cents. Unfortunately, it was stopped for 35 cents on November 14th on the gap open at 79.76 for a $20 loss. Lastly, U.S. major market trade and maintenance suggestions. Spider S&P 500 ETF, we had it as a neutral. SPY opened at 419.61, and the suggestion was to sell the November 434 call, which you could have sold at 274 with a stop at 433.02. Unfortunately, it was stopped for $4.56 on November 3rd for a $182 loss. Power shares QQQ ETF, we had it as a neutral. QQQ opened at 353.26, and the suggestion was to sell the November 360 call, which you could have sold at 631 with a stop at 359.05. Unfortunately, it was stopped for $8.57 on October 23rd for a $226 loss. And iShares, Russell 2000 ETF, we had it as a neutral. IWM opened at 165.66, and the suggestion was to sell the November 181 call, which you could have sold at 25 cents with a stop at 180.34. Fortunately, it could have been bought back at 5 cents for a profit of $20 before IWM rallied above our stop. Always bid 5 cents to get your short units back, whether they are simple short units or part of a spread event. And that's it. Net, there was a loss of $609 on the single unit side and a $42 gain on the conditional spread side. Not a great cycle, but respectable given the size of the price swings during the month. If you are viewing this review and are still not sure about subscribing, request a free trial edition at General at 912financialgroup.com. You'll get the latest edition, no worries, no credit card needed. Thanks for joining me, and as always, please like and subscribe.